Hi, and welcome to the Stockscores Market Minutes for August 3rd, 2015. So, are you expecting? Most traders focus on the result of their trade and go into a trade with an expectation for profit. We often dream about the good feeling we will get from making that profit, but that sort of thinking, that focus on the expectations of the trade, is likely to lead to an emotional attachment to the trade. And in trading, emotion is destructive. And so it's important that rather than expect and focus on expectation, instead focus on the process, focus on the rules, and identifying trades that meet the requirements of your strategy. You need to let go of the result and just make the trade for the sake of the trade. All right, here's this week's analysis, and we had a pretty good bounce back this week. However, late on Friday, we saw some weakness, and I think we could be rolling over and moving lower next week. You can see that that will have created a falling top on this monthly intraday chart. This low here, or pardon me, this high here is lower than the previous high, and that sets up a little bit negatively. Not terrible, I mean, this is a very short-term view, but I do think that we are more likely to move lower next week than higher, and I think what's going to govern that is just the expectation that interest rates in the US are going to rise, and I think the market will put that in their focus next week. Here's the long-term chart of the S&P 500, and you can see that our green upward trend line is converging with the red line of resistance. We're getting in a very narrow range here, and that means eventually, soon, we're going to break out of this range. We could break to the upside, we could break to the downside. Really what we have to do for the longer term outlook is watch which way we break. Does the weekly chart break through the red line? Yes, that means the long-term upward trend is likely to continue. If we have a weekly close below the green line, that means we're likely moving into a corrective phase, and we'll have to act accordingly. All right, here is a chart of the Russell 2000, and you can see that it doesn't look as strong as the larger cap S&P 500 index. You can see the falling top that has been building over the last month or so. Haven't broken support, really not a bad chart, but something that warrants a little bit of caution because we do see some divergence between the small caps and the large caps. And what was interesting is that, a month ago I was talking about how the small caps were outperforming the large caps, and now it's been going the other way in the last month or so. TSX is in a downward sloping channel. Volatility is increasing, which means uncertainty is increasing. I've drawn that with the red and green lines. You'll notice that the red line across the tops is moving away from the green line that is across the bottom. So support and resistance are moving away from one another. That is increasing volatility. That means uncertainty is increasing. Not a big deal again, but keep in mind that we are in a downward trend in the short term. Now, longer term, and basically when I show you that chart that I just showed, which was the monthly chart, we're basically just going back 4 weeks. So that's that little picture there. Going back 3 months, we've been trending lower. We're at some support now. Support held this week, but we still need to break that red downward trend line on the weekly chart to get out of this short-term bearishness. So longer term, we are sort of been trending sideways for about a year, I guess. And with quite a bit of volatility there, showing a lot of uncertainty, that really relates to commodity prices. So the Canadian market certainly doesn't look as strong as the US. And really where it's being felt is in the small cap Canadian stocks or the micro cap Canadian stocks, which have really been beat up horrifically through the month of July. They're pretty oversold, and so we saw a little bit of strength come back to them in the last 4 or 5 days. And I expect that that will continue with a little bit of a rally up to that red downward trend line, but I emphasize this week after week. You really want to be very careful with those microcap resource stocks, which are doing terribly right now, and I think are a place to be avoided. There are some areas in the TSX Ventures technology, for example, which are doing okay, but as I've said in the past, 2/3 of the TSX Venture is in the resource area, mining and energy typically. All right, here is the 20-year Treasury bond ETF. It has risen up to the downward trend line, what I've been expecting for the last few weeks, and it's now hitting that line, which means I expect that the US bond market is going to roll over and move lower, and that would mean that interest rates will rise. And again, I was talking earlier in this presentation about the likelihood that the market would pull back this week as people focus on the potential for rising interest rates in the US, and that's supported by this bond market chart as well, because we are hitting that resistance, the red line of resistance on the treasuries. Now remember, if treasury prices are going up, that means our interest rates are going down. I expect that now, after 3 weeks of rising bond prices, we're going to get falling bond prices, and that will represent a a rise in interest rates. So a drop in bond prices means a rise in interest rates, and I think that's what's going to be the focus next week. US dollar recently broke its little pullback downward trend line. It's been building a rising bottom, and I think the US dollar probably goes higher from here. Not conclusive yet, because we haven't got a break through that little red line of resistance that I've drawn right here. But certainly with the drop in oil prices that we saw on Friday, I think that that is the more likely outcome. And so if you are a Canadian looking to buy US dollars, I know it hurts to buy them now because the rate is so much worse than it was just a month ago, but it does look to me like the Canadian dollar could get even weaker with that drop in oil. We'll talk about that drop in oil in just a moment. Gold prices, very weak in the last few weeks. Pretty oversold right now. We're far below the red downward trend line that I've drawn here. So it wouldn't surprise me if we get a little bit of a sucker rally in gold. You know, could go up for a week or two. Don't think that that is the end of the bearishness in gold, because it has a lot of work to do before we can really call it that way. And there's the drop in oil prices on Friday. You can see just on the right side of this chart. We are now at new lows, have moved through the lows of March, and it looks to me like oil prices can continue lower unless we get a reversal and break that, red downward trend line. Let's say some sort of violence broke out in the Middle East or something like that that would disrupt supply or make concerns of a disruption in supply of oil. That would be the savior for oil. But right now, notwithstanding all those things, I think oil prices are headed lower after really making an attempt to bottom. It looks to me like they're failing, and that is going to hurt the Canadian dollar, give strength to the US dollar. Finally, the fear index is right at its lows. I think we'll see a little bit of a bounce back in fear this week, as I do expect there will be some selling pressure. Not a lock by any means, but I would say a 65% chance that the stock market goes lower this coming week, and that will mean a 65% chance that volatility increases, or the VXX increases anyway. But certainly there is a general sense that there's no big looming crisis on the market. So although pullbacks are happening, we're not seeing a reversal of the long-term upward trend yet, and therefore fear is really not a factor in the market. So U.S. stocks neutral on both time frames. Canadian long-term neutral, bearish short-term. Gold and oil bearish both on long and short-term. Short-term stock market strength starting to lose some momentum this week. Pullbacks are likely next week, with a likely drop in the bond market as investors look toward rising interest rates in the U.S. The U.S. Fed kind of gave us a hint that that was coming in their statement on Wednesday last week. Oil is likely to continue lower. Gold may make a short-term bounce, but it still remains in that long-term downward trend. Well, that has been the Stockscores Market Minutes for August 3rd, 2015. Have a great week in the market and trade well.